This information is marketing communication. The views and opinions contained herein are of Johanna Kyrklund, Group Chief Investment Officer and Global Head of Multi-Asset Investments, and may not necessarily represent views expressed or reflected in other Schroders communications, strategies, or funds.
Over the summer, equities continued to perform well as infection rates stabilised and stimulus remained in place. The performance was led by technology, with names like Amazon and Apple continuing to lead the recovery, while more cyclical names struggled. As we head into the autumn, the probability of a second wave of the virus remains elevated, but there is evidence to suggest that mortality rates are likely to be lower as hospitals are now better prepared compared to March. In a similar vein, national lockdowns are also less likely as better tracing allows for more localised lockdowns. Against this backdrop, growth will be dampened and policy will remain stimulative. But relative to the depths of March, we're likely to see some improvement in economic data, consistent with our expectations of a U-shaped recovery. In the short term, the US election is likely to cause volatility. Right now, the polls point to a win for Biden and a divided Congress. This outcome would have a muted impact on markets as the president's ability to significantly change policy direction would be limited. A Democratic sweep could have more profound consequences as tech stocks are currently priced for perfection, and a strong Democratic victory might raise concerns that the sector could be more regulated. There's also risk of a contested election, as Trump has already cast doubt over postal votes. All in all, we remain positive on equities because we do see this recovery as we head into 2021 and because rates remain so low, providing support to valuations.
Important information. This information is not an offer, solicitation or recommendation to buy or sell any financial instrument or to adopt any investment strategy. The material is not intended to provide and should not be relied on for accounting, legal or tax advice. Reliance should not be placed on any views or information in the material when taking individual investment decisions and/or strategic decisions. The views and opinions contained herein are those of the authors or the individual to whom they are attributed and may not necessarily represent views expressed or reflected in other communications, strategies or funds. Past performance is not a guide to future performance and may not be repeated. The value of investments and the income from them may go down as well as up, and investors may not get back the amounts originally invested. The forecasts included should not be relied upon, are not guaranteed, and are provided only as at the date of issue. Issued by Schroders Investment Management Limited, 1 London Wall Place, London, EC2Y 5AU, registration number 1893220, England. Authorised and regulated by the Financial Conduct Authority.